Welcome back my assets viewers. This time what you are going to see is it I can make some more money in infrastructure funds. This is what the topic we are going to discuss this point in time. Why it is this point is coming. A lot of investors are asking, sir, infrastructure have got participated in the rally. Do I get possibility to make some more money returns or not? Before we are getting into this video, we are going to see two reasons why the infrastructure the theme has delivered in the last 2 years time. Going forward, how it will be. If I want to stay invested, how much return I can expect? These are the two valid points we are going to do that. Before we are getting to the topic, we need to understand it is infrastructure or theme or sector funds. It's only for an investors who are ready to take high risk. Because they need to know the timing. Because all the way we say that in a mutual funds or any investments, time in the market is good, better than timing the market. But when you go to a sector fund or thematic fund, definitely timing makes a major sense than time in the market. Because you stay invested for 10 years, you would have not earned a great return. You would have made a pathetic return. But entered into a certain point in time, within the span of 3-5 years time, you would have made at least over 200% return. You would have made. That is what the way the sector funds or theme funds works normally. So this time we look at it the infrastructure theme as a whole. You saw that in between 2004 and 2008, these funds have given an enormous amount of return. And the stocks which they invest also given a fabulous return. There is no denying fact onto that. So why? Because the capital sectors always, the infrastructure sectors means if they invest in different sectors like capital goods, energy, metals and minings, automobiles. Some funds invest in financials also. These are the funds, these are the sectors, they corner at least, together they corner at least top 5 funds. Normally they corner around 80-85% of the entire portfolio. So these 4-5 sectors underperforms. Definitely the theme fund of like infrastructure will underperform for quite badly. So that means entering such a theme funds where it became very, very important. So those people who saw returns in 2005, 6, 7, they got into the market in 2008 with a thematic sector fund like infrastructure fund. Next 10 years, they have not made any return at all. Why? Because next 10 years, economy has started to slow down to various factors. Those factors have put pressure on these type of sectors which invest predominantly in a capital expansions. Because they underperformed, the returns on the investors also is completely gone so bad. So because of that reason, the returns of very poor. So why it has happened? What now changed? Why if you look at it last 2 years or 3 years period of time, these funds have given a fabulous return. I'll tell you about the 3 years return. Best infrastructure fund has given 44% return and worst has given 27% return. If you look at it a 5-year period, best has given a 28% and worst has given a 16%. Now you know that 16% return the last 5 years time, it's a fabulous. But understand these returns have increased because of last 3 years performance. 3 years performance, best fund has given 44% return, worst fund has given 27%. So look at the 3 years time, they have really gone fabulous. That is why the returns have come. So when you are getting into such a funds, you need to understand whether there is a potential to go up, why it is now going and why it has a potential to go up. That's what we'll see. After 2008 market crash, what happened? Government spending on capital formation has reduced drastically. What is capital formation? We'll understand that. Assume government is earning 100 rupees. Out of 100 rupees, how much they spend on meeting the revenue, that is running the country, how much they invest for building the wealth of the country, for growing of the country. If you look at it after 2008 economic crash across globe, government spend on supporting various schemes. Government has various schemes, so they have to support. They were spending out of every 100 rupees collected, they are spending 88 to 90 rupees. They are spending only for running the country. So only they left with only 10 rupees. For that they are making some investments to kickstart the economy. So because the amount invested to kickstart the economy was very, very poor, then you know that the GDP also was little slowed down for quite period of time. And then from 2016, you know that the government have introduced the demonetization and GST, all that is started to put pressure on the economy. One side government is not earning the revenue is not coming because the economy itself is undergoing bad. On back of that, government also is not able to spend due to the earnings has not become very less. In 2021-22, government decided that we'll spend more money. So if you look at it, the growth, the fiscal deficit Due to COVID, the government have given a lot of support and initiative. The fiscal deficit at 9.2%. And then it is gradually reduced to 6.7, 6.4, 5.9 and 4.5. They are that estimated for 26 is 4.5. Okay, that means when an economy is undergoing a pain, government decided that we will spend money for growth, ignoring the inflation. So when they try to do that, fiscal deficit will become very, very bad. Okay, when fiscal deficit is become bad, what will happen? If you need to, the economy has to improve to compensate it. So since government have decided that we'll spend more money towards increasing of infrastructure, then what they started from 2021, they said that out of rupees 100 I accumulate, I spend at least 16-18% towards growth of the economy. They said for financial year 21-22 they spend around 16%. For financial year 23 they have spent around 18%. For financial year 24-25 government is spending close to around 22 rupees. For every 100 rupees collected they are spending. In 2009 it was for every 100 rupees collected they are spending 10 rupees. For every 100 rupees they collected they are spending 22 rupees. See that almost 100% jump in the government spending. Because of the government spending has become increased, you find a lot of capital goods sectors or energy sectors or automobile all started to really do exceedingly well. In turn, their profitability have increased. That's why you see our share prices have increased. Lot of capital goods related stock prices have gone by 200-300% returns have gone. Then the last 1 year itself, there are certain funds have given at least 300-400%. That's one called Suzlon Energy that was undergoing. So if you look at it, Suzlon Energy, for example, how it is behaved from 2008 to 2021, you exactly know how this infrastructure theme related funds works. It's gone to a pathetic performance. From 100 rupees, 120 rupees, it has gone down to 6 rupees. From 6 rupees, it has gone now to 32 rupees. That means how much returns it has given. So this is what about a theme and infrastructure fund. Assume you are individual investor, you bought some capital goods stocks, which you had made enormous amount of return. You need to think, because a lot of capital goods stocks now currently at the price earning of 60 plus 60-70%, 70 is the price earning. When 60-70 price earning, there is a possibility when that some slowdown happens, these stocks will get a strong hit. So when you look at the fund, what they normally does, when the price earning increases on capital goods, the fund manager will try to shift it to the lower price earning, then to try to balance. So a lot of fund houses, they are now trying to move to the lower price earning stocks. They are not coming out of the infrastructure, they are slightly moving out to protect the portfolio. They strongly believe that there is an every possibility this sector likely to do next to 2 to 3 years better. Why? Because after the government spent for last 2 years time, the private spending is also started to take place. If you look at it the 4-5 years back, the private capacity utilization is 60%. What is capacity utilization? If assume the company can manufacture 100 crore, they are only manufacturing 60 crore. For the 40 crore cars, they are not producing it. Why? Because there is no demand. Now what is happening? The capacity utilization is gradually increasing. Last quarter, March 2023, if you look at it, that is the capacity utilization now turned to 75. They are expecting that utilization factor next 2 years going to be 75 to 85. I am talking about entire basket of manufacturing, I am telling. With government also giving a lot of input thrust towards manufacturing, this sector has a potential to go forward. Next 2 years time, it has a potential to deliver maybe 30-40%. I am not predicting return, I am giving based on past return. There is no guarantee on that. Please understand, this is a disclaimer I want to give. It has a potential to deliver 30-40%. These are the inputs I got from a lot of fund manager. I spoke. They feel these are the points they said they are very strong that can be able to deliver. With these particular points, I feel that the infrastructure theme has a potential to deliver for next 2 years. You have to be very, very careful. When the theme has gone, you should come out of that. If you stay invested, your return will be very, very poor. So those who have capacity to take a risk and ready to monitor and time out, you have to exit completely the sector. You have to sell entire fund and come out of that. If you have that ability, please invest in infrastructure fund. It has a potential to deliver. This is Suresh Parthasarathy, certified financial planner, founder, My Asset Consultant, signing off. We'll see some other video. If you are a first time to our channel, please subscribe. If you like the video, please share. Bye.